And where the markets are pretty good on the equity side of things, but not quite the same for the currency. Today we see the naira slightly weaker at 158.05. Let's cross to UBA to get a perspective from Nwabueze Okonne, a currency trader at UBA, who'll give us his views on why the naira is slightly weaker today. It's great to have you on the show today. I want to first of all get your perspective on the central bank auction. What I'm hearing is that they auctioned $200 million today. That is slightly higher than the $180 million auctioned on Monday.
Yeah, well, that's correct. 200 million today from 180 on Monday. Albeit in response to the fact that the sense of liquidity in the market is actually reducing. So the central bank had to come out with a slightly increased volume amount of offer to meet whatever latent demand there may have been in the system. And we could actually see the result in the reaction in the markets and the opening prices remaining stable for most of the trading hours until the end of the trading hours, where we found the naira weakening a bit on the back of a couple of corporate demand that came into the market towards the closing hours. But overall, it's been a fairly stable week for
Indeed,
the naira so far.
Quite stable, as you said. But I think one interesting dynamic we're seeing, at least over the last 2 weeks or so, is the slowdown in the demand from foreign investors into our bond market. And to some extent, that can be explained by the fact that those yields are much lower than they were 2 weeks ago. To what extent do you think this is impacting the naira? Because clearly that was one of the things that strengthened the naira just a few weeks ago.
Oh, true. Wole, yeah, the yields currently are not. I think the yields currently would actually elicit the kind of wait and see approach from the FDIs so far. Not like you said, it's slower than. But outside of the fact that there's been a slowdown, but also we've had a couple of flows from the oil majors coming into the market, so that had tend to counter trend the effect of the slowdown of the FDI, and that's why you've not really seen naira break out of the range that it's been doing. It's been doing between 157 and 158 for the close to like 3 weeks running now, and nothing really has changed outside of those bands so far. So slowdown on the FDI, other flows coming into the market in terms of the oil flows, neutral effect, stable naira. That's what we've seen. Even on the CBN window, we've seen a slight gain by 2 kobo from Monday's auction. So overall, the picture actually looks pretty good and brightening, I would say.
Okay, so the foreign investors are not jumping over each other to get those bonds anymore. So in your view, what's the outlook for yields? Clearly, if those yields pop up again, then we may see a little more interest. What are your thoughts on where yields go from here for the bonds, from the bond market?
I actually would agree with that. I actually would. There's still a couple of interests that are coming, and I think one of the first response that you get when on those interests is like, oh, yields at these levels, but you get the sense that if the yields doesn't pop up, it's better to just come in and take advantage of what you have now than to sit down and wait and you never see it at these levels again. So I think there's a limit to how much the wait and see would happen, and all things looking good. Europe seems fixed so far. You might just be seeing some more interest in the risk asset class and the emerging markets coming on again. So if the yields doesn't pop up in the sense is maybe like a 25, 30, 50 basis points rise again, and you see interest emanating across the curve.
What's going on around the Tbill market? I know that foreign investors were very interested in Tbills earlier on. Now they're moving into bonds. What kind of levels are we seeing for Tbills right now?
I wouldn't say their interest in the Tbill market has waned, because take for instance, we had an auction last week and we saw the yields across all tenor below 14%, and the last time the primary auction went, at least the longer dated bills were above 14%. So we actually did see a lot of interest at the 1 year, which we've always been saying. It's just that now we've seen the interest actually shift across the curve on the bonds market, majorly be on the back of proposed Nigerian listing in the JP Morgan bond index. That's given it a boost, and that's why you've seen a shift. So it's really not just shifting from the T-bills to the bond. It's more like you just have additional interest now in the bond space.
Okay, staying with the money market, clearly that's an indication of liquidity. I'm hearing overnight rates are now at 15.5%. just not too long ago, they were closer to 12%. Clearly, there's been a little bit of tightening, and we don't know that FAC allocations or government allocations will be disbursed next week. Give us a picture of the money market right now.
Well, I mean, I think on the money market space, so far so good. We've not really seen any need to cause any fidgety like we saw about a month ago. I think the market has adjusted and is reacting in a more proper manner to tightening liquidity. I mean, rates actually inched up today on the back of typical, today is a funding day for the market, so generally you see a bit of tightness in the rate or a bit of rise in the rate, but overall I don't think the rate will go outside of this range even until next week. Like you said, when we expect the FAC to come in towards the close of last week, we might be a little bit of squeeze on the days that you have funding, but outside of that I think overall we'll stay within the stable level of 14 to 16%.
All right. Nwabueze, thank you so much for that perspective. Thanks for joining us on CNBC Africa. We look forward to speaking to you again. Nwabueze Okonne, a currency trader at UBA.